Hey guys, welcome back to my YouTube channel, Result Finance. And today we're going to be breaking down a currency pair, EURGBP, that's the euro to the Great British Pound, that we sent it out on trading on our Discord channel on the 10th of November. On the 10th of November. Now it's important to look at the info here. Say this setup is a secondary setup, right? So our intention of this setup is actually to buy the market, but however, we are seeing a likelihood for a sell because of this change in character here, and its reaction on this other block, right? So we're looking for a sell to the downside so that we can take out this liquidity and then push up to the upside. So without wasting much time, let's get right into it. Now, first thing first is to determine the order flow in the market, right? Now we can see that price is making a series of higher high, higher lows, higher highs, higher lows, higher high, higher lows, lower high, lower, higher low, right? Since I've been taking out this low, we have a higher high here, they will have a lower low. So right here was our first indication that price was changing its momentum or character from bullish to bearish. So that's our first indicator right there. So when that happened, our expectational order flow changes, right? So we're not looking now to take out this high again, because this now has become a strong high and this has become a weak low, right? So this is a weak low. So expectational order flow now is for price to react off of this maybe order block here, right? And maybe take out some areas of liquidity and then push to the downside. So what do we see? We see price actually did that swiftly, and then this became a break of structure to the downside. So like I said, again, expectational order flow would be for price to actually look for an area within this price leg to take out liquidity and then continue to take out the lows, since we're now in a downtrend, right? But what do we see that price did right here? We see that price actually now broke this strong high again, causing a new change in character. So expectational order flow, okay? That's all we do here. So what we're expecting now since character has changed, we're expecting price to actually keep going to the upside, right? So within this price leg, we want to see areas whereby price can actually come back to, test it and keep moving. Now we see this other block forming right here, right? That can be one. We're looking at it from the 4-hour time frame. You can also see these areas here. This could also be areas of liquidity resting right here. All right, so how then do we know that price was going to retrace from here? That's by going into smaller time frames. Now on this 5-minute time frame, we can see that price has come out but come back in, but then left these areas here of market structure. You can see price putting in this low. It's just really creating consolidation around here, taking out this high, right? So within this price, like we have this low, taking out this high, right here. I think I'll rather use a 50-minute time frame to look at that here. So I have this here, right? So let's see the 5-minute time frame. Okay, this is also fine. So we have this this area being taken out here, and then see price pulling this low all the way up here. And what happened? What do we now see here? All right, since we had this low and then it was taken out here, so what do we now see? We see that price went all the way up here. It came back down and took out this low right here. So this will also be I like this low because it was like a 15 minutes what I say, price leg, because ideally you can also see that there's this low here, right? You can also see this this low right here. Okay. So, but since we are looking for entries, you want to actually be very careful. So you can see that this will be an internal change of structure, and this will be, we can call this, maybe let's say this is a 5-minute change of structure, and this can be a 15-minute change of character and 15-minute change of character. Okay. So what do we see here? We see price change character at this point. So within this price leg now, right, you want to look for areas or other blocks that are there resting there for price to come and tap into and then take us all the way down. I can see this one here. Where else can you see? There's one resting here, and I don't see any other one at the moment. So expectationally now, we're expecting that that this is the reverse point. If we're looking at the 4 hour, we're believing now that this is the turning point where price is going to actually start retracing down to sweep out liquidity that's built up here to continue pushing to the upside, right? Since our order flow is now bullish. So if we go back to the 15-minute time frame, we're looking for a tap into this area now. Oops, sorry. So we're looking for a tap into this this area or this one, and where we'll be targeting. If we're going short, we'll be putting our entry around here. That's at the order block. Our stop loss will be very tight, and our take profit will be all the way. This can be our TP1. Ideally, this should be our TP1, right? Yeah, but since I draw out a Fibonacci and then I'm anticipating that price is going to go all the way down to, I think, this level. So where's our 50%? We have our 50% resting right here. So I'll be anticipating that price will at least touch or sweep this 50% before pushing to the upside on a full stretch, right? So it doesn't mean that we can't see potential movement before the 50% or potential reversals before the 50%. But on a full stretch, I'll believe, or I will want to see price come and take out this 50% first. Okay. So now let's see how this trade ends. So we have another order block up right here. So we could also put another sell position right here. Our stop loss will just be on top of the order block, and then we'll be targeting these lows. Our TP1 is resting here. Okay, this is just to show the what we are anticipating. So even if I put my expectation of my profit and loss like this, normally if this price moves like 1:2, this 1:6, this 1:5 right here, meaning I'm risking $100 to make this about $600, right? So if price gets all the way to 1:3, trust me, I've taken out 50% of my position already. You get, but because of you're trading smart money, and then you know that this is what you're expecting, you get, and what is more probable, then you should be targeting this low right here. Because of one, we have this liquidity build up here, right? We have this liquidity, we have this relative double bottom here. That's also a form of liquidity to be taken, right? So let's see if price taps into our trade. So that's it there. We have tapped into this trade right here. So this is our entry. So that right there is our first TP1 hit. Now, if you look at price now, you see what price did there. Price reacting to these areas here. And then what did I do? I attempted to, let me pull out my Discord. So there was a second trade attempted, even though price had not gotten up to the 50%, right? But I could attempt it because I was targeting a 1:6 reward with a very tight stop loss. So I couldn't lose anything on this trade that much. So I was anticipating price to actually react from this level here, right? And then push to the upside. At least give me a 1:3 or 1:, whatever. Then so I think that was this trade right here. I think we're using the 30 minutes. So we see, this was the first sign that I see price is trying to react, but I waited. Let's go back to 15 minutes. There was also a lot of liquidity buildup. So you see that price now took out this low right here, right? And ideally, it has even tapped into our 50%. If you look at it from this side, it has tapped into this, or maybe it didn't tap just accordingly, right? Because price will always give you what you expect. But this has already gone to our 50%, ideally, okay? So I believe that this was where price would generously return and start taking us to the upside. So what I did was, you see this low, this high, lower low, and then if you look closely, you see that we're taking out this high right here on this candle. Let me push it a bit forward. Yeah, we took it out here. So for me, this would have been my entry model. Anything around this area now, I can start looking to get into this market. So I could open a buy. You can see from 1 minute time frame. My buy could be sitting anywhere around these levels. Good. So my buy has tapped in on this candle right here. So where was I targeting from our chart here? Okay, I was targeting the highs. What time frame is this? It's a 30-minute time frame. So I think I was targeting this high right here, if I'm not mistaken anyways. Yeah, I think I was targeting this high right here. So that's a 1:8 from the 15 minutes time frame. Let's see that we tapped into this trade. We're going very well. We're actually going so well. This was already a 1:5 already. So I think I'll check, and I can't remember exactly what I took, but I'll show you. Then what happened, I think we had news coming out that day, and I hit my break even. But at least I think I already taken out 50% of my profit on 1:3. Okay, you can see this right here. So I said you may choose to close out on your trades or hold over the news or set break even, right? So I held this trade over this news and it took me out right here. So what did we see that the news actually did? Though it has swept me out of this trade, I had already taken out substantial profit, then the rest hit break even. Then yes, and that was when price now came to test this real level here. That was the level that we had initially put on our, that's the level we had initially been targeting right here. This is the second one, right? This is it right here. So this was it. So this is supposed to be our real take profit, but I've left this trade a while back. Then what happened here? We see that price tapped into this area very swiftly and gave us a very good and perfect entry. So that was our entry all along right here. This would have been our entry here. So this was the buy that we were anticipating, but sadly, I did not take this buy. So yes, this would have been the entry. This would have been our entry here. The moment I see that price has here, stopped here, broken the structure, come back here, and then it's going up. My entry will be somewhere around here, and I'll be targeting maybe this low just to be on the safe side, because I know I'm going to make a lot from this trade because of the fact that you are setting off your expectational flow in the market. And what do we see? This is a 1:6, but it's not just a small 6, it's a very big margin. And then we see price has done this here, right? So but I didn't take this trade, but now I took the other trade. So I think on okay, this is the sell right here. So you can see the sell on 15-minute time frame. You can see this spike. That's this double top right here, and you see that my entry was just right here. Then for the buy, EURGBP, yes, this was the buy on the, what time frame is that? That's a 1-minute time frame. So this was the buy I took, and you can see that I was still in this trade just before the news dropped right here. I was at the peak of the trade. So when I started seeing that this happened, I already took out my profit. I took my profit when price started pushing low here. So I did a 1:3. So that's about that, guys. And thanks for watching this video. Please, if you haven't subscribed to this channel, please do subscribe. And if you want to learn smart money concept, send me a message on IG, and I'll be happy to teach you. In the meantime, stay cool, and yeah, take care.
Be hard to